Welcome back to Quick Take Stock. I'm Tim Stenivek.
I'm Katie Greifeld.
Well, Katie, one thing that I've been thinking a lot about as we've seen this meme mania and retail trading mania play out is what are some historical parallels? And it makes me think back to the 1990s. I was a young child then, okay? And I do remember the concept of day trading, and we heard so many stories about day traders and what's different now and how that ended versus how this will potentially end or maybe not end.
Yeah, I mean, so far it's not ending. A lot of people thought it would, and a lot of people were surprised by this moment, but there are parallels to the late 90s, the early 2000s, what you saw in tech stocks in particular, in addition to retail traders. And I mean, I was on Twitter this weekend, as I often am, and there was this amazing Forbes cover from 1998 that was making the rounds. And it looked like it could have been published today, maybe with some updated graphics. But I mean, it really, that headline, a bunch of kids tormenting Wall Street, you could have written that and published that today.
Well, let's get right to the man on the cover right now, Serge Milman. He's the co-founder of 840 Venture Partners. Back in 1998, Forbes profiled him as he was on the prowl for momentum stocks. They described him as one of the, quote, smart freelancers competing against giant over-the-counter market makers such as Merrill Lynch and Goldman Sachs. Serge, it is really great to have you on Quick Take Stock. What's your experience with momentum trading like now that we've seen meme stocks overtake interest the same way that we saw what was happening in the 1990s with retail traders?
You know, I've been asked since Twitter and since my cover came back, I've been asked this question so many times. And, you know, obviously the similarities is that these retail traders, they're utilizing the latest technologies, you know, companies like public.com, robinhood.com, quick plug, our fund's an investor in public.com, but they're utilizing tech just like I was, you know, 20 years ago. To compete with the big boys, to compete with the market incumbents. The big difference, though, is 20 years ago, I'm sitting in a room with 30, 40, 50 other guys, and we're communicating and we're buying Oracle, Microsoft, IBM, Lucent, you know, companies, some of which are barely doing anything today. Today, though, it's so amplified because of technology, because of TikTok and Reddit and Wall Street Bets and Instagram, that it's, you know, you're not just talking to the guy next to you, the person next to you, you're talking to millions of traders. And to me, that's what's amazing about this moment in time, is that we're seeing this solidarity in the retail trading community, in the community that basically I come from, the small trader world, to take on some of these, you know, big boys, the incumbents in the market. Yeah, I love it. I love everything about it.
So I think the point you make about how there's just a lot more technology now. There were chat rooms in the 90s, but now we have so many social media platforms. And you said that it amplified this. I'm curious, are you saying that, you know, the effect on the stock market, the impact we're seeing in these individual stocks is greater than what we were seeing back in the early 2000s?
Yes. I think it's much greater, and you have the, you know, really the two factors at play. The one is that the transparency of information. You pretty much have real-time access to see which fund is short which position. You know, which fund is short the next GameStop, the next AMC, and there's a host of these, you know, brick and mortar, old school, non-sexy, non-appealing stocks like the Macy's, the Gaps, even, you know, I'm surprised no one's talking about Barnes & Noble Education. It's the same founder as GameStop. So you have all these companies today that are real companies. They're not pump and dumps that we sort of came up with in the 90s and the early 2000s. These traders today, these retail traders, they're identifying these short positions. They're then doing their real analyses on these companies. And as a collective union, they're buying these things. And as they're buying them, their buying pressure comes into the market. The news cycle starts to take over. FOMO, Elon Musk might tweet about it, and then these funds have to cover. So you're seeing these moves that really didn't happen in so much in my day. They're just amplified so much more. And if they did happen in my day, chances are it was really like a no-name stock, and it would happen for a day or two. But you know, we've all heard of GameStop, we've all heard of AMC. To me, it's very I don't want to sound cliche, but it's very American. It's patriotic for these investors to invest and buy these companies with the premise that they're going to go up and hopefully continue going up.
But not everything goes up forever, Serge. And one thing that I've been grappling with is how this ends. And if we take Clover Health, for example, over the last 3 days, I mean, look at the way this has just shot up, especially yesterday when it closed higher by more than 85%. At what point it was up higher by more than 109%. Today, down by 13, 14%. I'm wondering how this ends. Who's left holding the bag? Because we could potentially see a whole host of retail traders having bought in at the top and finding themselves selling at a lower price.
Absolutely. And look, like to whoever, all the retail traders that are watching, I beg, please, have some rules in effect. Don't be greedy. Always take profits. Don't just buy a stock knowing nothing about it. Look at charts, know what a basic chart is. And most importantly, don't gamble anything that you can't lose. And I do use the word gambling because I'm not here to talk about the fundamentals of Clover Health or GME or AMC. I've never been a fundamental analyst. I look at charts and I look at momentum, and that's where, over the course of my career, I've made, the bulk of my money. So please, don't gamble, don't invest anything you can't lose, take profits. Today in this meme world that we're living in, they're talking about two types of hands, the diamond hand guys, the holders, and the paper hands guys. I'm surprised no one's talking about sitting on your hands. And that was one of the first lessons I learned, is one of the best trades you could do is none. Just sit and be patient, sit and be patient. Is GameStop, is AMC, are those great buys today? I don't know. I wouldn't buy them. I wouldn't short them, but I would sit on my hands and wait for opportunities. Just a few weeks ago, if you look at a GameStop chart, you'll see that through the 180, 190 levels, it was a beautiful chart setup, nothing to stop it. Once it went through, sure enough, GameStop went as high as 340. So sit, be patient. Not every trade's going to be a winner. Just cut your losers short. And I guarantee if you book profits, you can have a great career investing in stocks.
I love that. Sitting hands, maybe we can get it trending. We'll see. But Serge, I want to ask, because if I think about January and February, it felt like initially a lot of people were surprised that you could have day traders having so much influence over stocks. You were in the trenches in the late 90s. Were you surprised by this sort of revival of retail traders?
Yes, I was surprised at the caliber of the moves. When GameStop went to 70 and then 90, I was like, wow, Jesus Christ, this is crazy. And then people started talking about buying 120 calls, 130 calls. I'm like, no, I'm sitting on my hands. And sure enough, this thing went to 300, had the correction to the low 100s, and look, it's back to the 300 levels now. Yeah, I'm as surprised as anyone. But having said that, I'm so happy to see this, to see more inclusion in the markets, more people coming to the markets, learning about the markets. So I think net overall, this is very bullish for the markets, more participants and more intelligent participants. And that's the biggest difference, is because of the openness, transparency of our financial system today. I feel the investors today are much savvier than the guys in the late 90s who maybe weren't doing it professionally like me, but were doing it at home from Charlie Schwab or E-Trade, whatever. I just think they're a much smarter investor today, given their relative age and generation.
So, Serge, do you see this as more of a moment, the way the 1990s and retail trading kind of passed then, and the resurgence of it a little bit later? Do you see this as a moment, or do you see this as the new normal, where retail investors are going to be market participants at this rate moving forward?
I think it will quiet down. I think as the news cycle matures and new stories come up, I think it will quiet down. But the kindling, the fire starter, is here, and I don't think this is going away. So long as these big funds are shorting these companies to the degree that they are, and so long as this information is transparent and we can see it, we can come together as a community to identify these stocks, these companies that might not be thriving like Amazon and Facebook, but are surviving in our environment. So I don't think it's going away.
Serge Milman, it is so great to have you on the show. We got to have you back. Thank you so much for joining us and for taking the time on Quick Take Stock. Serge Milman is co-founder of 840 Venture Partners. Big thank you for joining us. Well, coming up next, GameStop has added